Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in previous videos, and I will do a quick review on each of them. In a later segment, I will begin covering these new names and review them in future videos. I have put in timestamps, so please use them to skip to the names that interest you. Mastercard hasn't moved a lot, but I thought of giving this name an update since the last review was on the 8th of November last year. In that video, I highlighted the 20-week simple moving average and said that this resistance has kept Mastercard's advances. Even though Mastercard rebounded, we can see that it failed to hold above the 20-week simple moving average twice, which tells me that upside bias is lacking. This week, Mastercard tumbled and closed within the Ichimoku cloud, suggesting that downside bias has prevailed. I will stay bearish on Mastercard, and the rising wedge has a textbook target at 432.4. I've also not updated SAP for some time. In the last review on the 22nd of November last year, I said that I'm technically bearish on SAP due to the completion of a cup and handle top, with a textbook target at 130.38 and with supports at 181.82 as well as 165.44 that can bounce price action higher. This week, upside was strongly rejected by the 20-week simple moving average, and I still expect further downside going forward. The last update on Adobe was also on the 22nd of November last year. In that video, I turned technically bearish on Adobe due to the completion of a descending triangle in a bearish direction. Adobe rebounded thereafter, closing above the resistance trendline, but eventually failed to hold above it, as well as failing to hold above the 20-week simple moving average, which is the third time this has happened since 2024. I expect downside to prevail, and the textbook target of this descending triangle is at 219.05. I last updated on Microsoft on the 6th of December last year, stating that it is in a bearish resumption phase of its double top that has a textbook target at 430.1. Microsoft this week fell to a low of around 455.90 and reaching about 58.5% of its textbook target. I expect a rebound soon in Microsoft because price action overextended below the lower Bollinger, but expect upside to falter either around 470 or losing traction around the 20-day simple moving average to resume the downside. I'm staying bearish on Microsoft. In the last video on the 28th of December last year, I noted that Alibaba filled a gap down on the 21st of November over here. I stay bearish on Alibaba due to a cup and handle top that has a textbook target at 119.9. Even though Alibaba has rebounded, there are reasons to expect a decline going forward. Number one, there were two gap ups on the 9th of January as well as 13th of January. I expect these gap ups to be filled. Number two, price action has overextended above the upper Bollinger, and the correction usually follows. Number three, upside failed to hold above the Ichimoku cloud, a sign that upside strength is lacking. I will maintain a bearish outlook on Alibaba. Something new may be developing in the Sing Ringgit, but just to recap, in the longer term, I am still bearish on this cross due to the completion of a head and shoulders top that has a textbook target at 2.8365. Now, in the last video on the 28th of December, I said that Sing Ringgit, after closing below 3.1560, is headed for 3.1305 next. All these are based on the weekly chart, but on the daily chart, this is what I suspect could be happening in the shorter term. I suspect Sing Ringgit may be forming a double bottom, which is a bullish pattern. Now, this week, we saw the rejection, topside rejection at the 20-day simple moving average. This has slightly reduced the risk of forming a double bottom on Sing Ringgit, but If it closes above the 20-day moving average in the coming days or coming weeks, then upside bias is expected to increase. This double bottom will be completed via a close above 3.1753, and if this happens, the near-term, short-term textbook target is at 3.2089. But if you were to look from a longer-term perspective, even if Sing Ringgit returns to above 3.2054, which is the neckline of the head and shoulders top, this, from a weekly chart perspective, is just the correction phase of this bearish pattern. After the correction phase, Sing Ringgit is expected to return to the bearish resumption phase, targeting 2.8365. I turned technically bullish on EURCHF in the last review on the 6th of December, noting the completion of a descending triangle in a bullish direction on the weekly chart. EURCHF went into a correction after that, but note that downside bounced off the resistance trend line twice before rebounding and closing above the 20-week simple moving average. This week, EURCHF held firm above the 20-week simple moving average. I will stay bullish on EURCHF. The textbook target of this descending triangle is at 0.9770, but there are three resistances that can prevent EURCHF from reaching this level. They are at 0.9445, 0.9634, as well as 0.9682. I noted that Sterling Aussie is forming a descending triangle in the video on the 12th of January. This neutral pattern was completed in a bearish direction this week. So I'm now technically bearish on Sterling Aussie. The textbook target of this pattern is at 1.9467. Rebounds to slightly above the resistance trend line should be viewed as the correction phase, but if Sterling Aussie closes and holds above this resistance trend line, then we should reassess the validity of this bearish pattern. I will begin coverage on the dollar index. I just recently ceased coverage on this, but price action has developed into what appears to be a head and shoulders bottom. Price action closed slightly above the cloud this week, giving it an upside tilt, but this bullish pattern will only be deemed complete if the dollar index closes above 100.25. Completion suggests a textbook target at 104.3, but there is a resistance at 101.97 that can reject DXY lower if tested. There are potentially two crosses that are not agreeing with a stronger dollar index view. First one is dollar yen. Now dollar yen, there is bearish potential, but this is not yet technically bearish because the rising wedge that is forming is not yet complete. Completion of this rising wedge will be via a breakdown below the support trend line, and if this happens, it would suggest a drop of 5.7 yen. Alternatively, breaking above the resistance trend line will invalidate dollar yen's bearish potential. Another cross that is not agreeing with a potentially stronger dollar is the Kiwi dollar cross. It may be forming a head and shoulders bottom, a bullish pattern. So far, declines have been mild and managed to bounce off the Ichimoku cloud. This bullish pattern requires a close above the neckline at 0.5845 to complete and has a textbook target at 0.6106 with a resistance at 0.5995 potentially blocking further upside. Closing below the Ichimoku cloud will invalidate this bullish potential. I am a little late to cover Aussie Swiss, but the move is still fresh, and this is in line with my bullish Euro Swiss view and potentially bullish Sterling Swiss. Now Aussie Swiss completed an ascending triangle in a bullish direction on the 15th of January, and the textbook target is at 0.5517. On its way up, Aussie Swiss could get rejected by the resistance at 0.5440. Declines to the support trend line will be viewed as corrective in nature, but closing and holding below the trend line will be time to reassess the validity of this bullish outlook. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.